Welcome to another episode of Real Estate Investing Explained. Here's today's question. When would an investor exactly want to do a 1031 exchange?
So what's important to know is that 1031 exchanges, again, it's about deferring gains, right? So one of the first things that you need to realize is you have to make sure that you're aware that you've actually had a gain on the property. So there are certain situations when individuals come to us and they would look to do a 1031 exchange, and we'll discourage them because, again, they haven't actually had the capital gains that they need to defer. And that's one thing that's really, really important to understand is, have you had a profit? Is this the right time for you to defer those taxes? That's one thing that's really important to understand, is to make sure that you have a gain in the first place. The second thing is to understand is an individual who's looking for a long-term investment strategy that they have potentially they're locked into a market. Right now, there's a lot of laws that are affecting certain markets. Right? For example, some markets might be rent control markets. Some are, you see individuals who are moving to other areas that are potentially more beneficial. There's an opportunity to be able to move from a single home to a multifamily unit. So a good example for that is I come from Silicon Valley. So there's certain individuals who no longer want to be in managing properties in Silicon Valley, they want to move somewhere else, maybe potentially like a state like Florida, which has no state tax. So they're going to sell a property. They're going to have that's appreciated very strongly, especially hopefully Tesla will only grow. So more of those homes in those areas are going to become more expensive. And the idea is they're going to say, look, it's time for me to move to a different state where I want to still be actively involved in real estate, but I want to diversify my risk across maybe several properties in a given state or multiple states. So that's another good reason to do a 1031 exchange for those investors who are looking to move out to better, potentially more profitable areas where they can have a great return on their investment. Mike, anything you want to suggest? That's a great question.
I would just add, really, if anybody is selling property at a profit, so you have a property and the market's been very strong in many portions or most portions of the country, I believe. If you're selling the property and you're going to buy something anyway, then it makes all the sense in the world to do a 1031 exchange. What I would not recommend, though, don't let the tax tail wag the dog. So you don't want to do an exchange and buy garbage property just for the tax savings, because you could lose a lot more by buying a bad property paying taxes. It's always important to make sure you do your homework, and whatever you're buying to replace what you're selling, you want to make sure that it makes financial sense and it's going to be a good profit.
That's all for this episode of Real Estate Investing Explained. Be sure to follow me on Instagram, Twitter, and Facebook, or subscribe to our YouTube channel to get even more free content.